Welcome to Into the Forest with Pine. Today I have Profit from Meta DAO. Profit, why don't you kind of tell us about who you are and kind of what you're working on at Meta DAO?
Sure. So I'm a programmer. I used to work in Web 2, and then I got nerd sniped into DeFi, and I worked on Ethereum DeFi for a while. And then I was kind of in all those experiences a little bit frustrated with the ways that organizations were run, or more appropriately, the way that organizations were structured. It felt like decisions were made not based on what was in the interest of the organization, but what was interest in like the managers, what would basically make them look good. And then I discovered Futarchy, which is this really crazy idea invented by an economist 20 years ago, but never tried. Uh, Robin Hanson is the guy who invented it. And the idea is to have markets govern decisions. And so we can get into a little bit what that actually means later. But I just got infatuated with this idea and wanted to build it immediately. And so yeah, pretty much since then have been building that. The white paper was released in November 2022, and so it's been like a year of working on this and trying to build an audience of people who are interested in this, which is harder than I expected. But maybe like I should have predicted it was going to be hard starting as an anon, like with reputation at zero. Uh, and so yeah, we went live this month, and we're currently in the process of making our first decision, which is pretty cool because it'll be the first market governed decision in the history of humanity. And so, yeah, kind of cool to participate in that.
Yeah, awesome. Can you kind of break down in depth like the problems you saw with like maybe Web 2 and like traditional DAO governance and why you thought Futarchy would be like a good solution to this?
Sure. Yeah. I mean, there's a bunch of problems with Web 2. I mean, I think anyone who's worked for a big company has a pretty good intuition of the problems that companies face. Like the people usually are not acting in the interest of the company; they're acting in the interest of themselves, which is okay if you can get those two to align. But the problem is in these hierarchies, they're very often not aligned. Like for example, there are many cases where someone would do something that was good for their business unit, and would improve their own internal metrics, but would potentially screw over another unit, even though it's all supposedly within one company and one organization. And then, yeah, traditional DAOs, like in Ethereum DeFi, most of them, almost all of them, I would consider not DAOs because to be a DAO, I mean, in the name, it's a decentralized autonomous organization. And most so-called DAOs are neither decentralized nor autonomous. So they're more just like O's. Uh, and so, yeah, Futarchy, and really the reason why those existing DAOs are not decentralized is because this voter apathy problem where like every people listening to this probably own hundreds of shares, right, of different stocks, and no one is actually going through the annual board meeting. Like even though I think there's only proxy meetings once a year, no one is actually going through and understanding what these companies are doing and voting on that, because there's no incentive to do so. And that's kind of what's happening with existing DAOs, with a few exceptions, and just because that's what the incentives are. And so with a market-driven system, you have a direct incentive to participate, not because you want to be altruistic, but because you think you can make money by trading against people. Just like how hedge funds today do all this research into underlying companies, not because they want to like publish that research and help companies improve their business practices, but just because they want to make money. And so we depend on those kind of people and those interests. Uh, because what happens with the voter apathy problem is you end up as not decentralized. You just go along with whoever's on the ground. You just go along with them. And you can see that empirically with companies, and you can see that with DAOs as well.
Okay. Yeah, makes sense. Can you kind of like break down how a decision is made in a Futarchy DAO and like what's kind of the process of letting the market make a certain decision in the DAO?
Sure, yeah, that's a great Great question. So, I think the easiest first step into understanding it, because it is a novel mechanism, is to with an analogy. And so imagine a company is organized as a futarchy, and imagine it's trying to decide whether or not to fire the CEO. So you can kind of imagine if it were organized as a futarchy, the company's stock would fork into two or split into two. You'd have fire CEO stock and retain CEO stock. And then after, I don't know, like 10 days or something, you would look at the price of both stocks and see which one is higher. And then from that, if the price of fire CEO stock is higher, you would fire the CEO. And if the price of fail CEO stock is higher, right, sorry, retain CEO stock is higher, then you retain the CEO. And that's essentially what happens in a few. And so you're relying on the market's assessment of in which scenario is more valuable for the company. The way it works, how we actually have implemented this is we have for every proposal, which a proposal is just like a SVM machine instruction, a Solana virtual machine instruction, which could encode something like transfer 10,000 USDC to pay for this new program, or like the proposal that's live today is transferring 1,000 Meta to me to build this product. And so that's what a proposal is. And then for every proposal, you create two markets for Meta, the native token, and you look at there's a TWAP oracle, so a time-weighted average price oracle. After 10 days, the on-chain program, the DAO program, looks at both TWAP oracles, and then if the price of the pass market, which is one of the markets, is higher, then it does the thing. It does whatever the proposal was, and it reverts the fail market. So all of those trades become null and void. And if the price of the pass market is lower, so if the market thinks that the DAO would be less valuable if it passes, then it reverts the pass market, and it just doesn't do that proposal. So that's pretty much how it actually like works at a low level.
Okay. So say I had like a perspective on it, like could you kind of explain like how I would make money and what happens if I like pick the wrong side and kind of pick the one with the lower TWAP?
Sure. So yeah, say that I guess what would be firing maybe okay, yeah, maybe we could say like the current proposal that's live is to fund a product. And currently today, the pass market is priced higher. I think the last I saw this morning is that in the pass market, the mid price is around $3, and the fail market, the mid price is about $1. Now, say you, Jack, have some information where this product is actually a terrible idea because I don't know, you have some knowledge that no one else does. How do you profit from this? So what you could do is short it in the pass market, or you could also just sell your Meta in the pass market, and you would get you would have these conditional trades such that like you would sell it at this $3 price, and then if the proposal actually passes, you get $3 of value, even though maybe you believe that Meta is only worth $2 or $1 if this proposal passes. And maybe in the inverse, maybe you actually have some information that this proposal is way better than you could have than other people are thinking, than the market currently thinks. Like maybe Meta would actually be worth $5 if this passes. Then you could also buy against people who are selling it at $3, and then you could you're essentially locking in that lower price. And it's you're not betting on whether or not the proposal will happen, because if it doesn't happen, then your trade is reverted. But it allows you to lock in that price. Essentially, you can think of it as like right now, OpenAI, all that news is generating a lot of stock information, right? Like something will happen and then Microsoft stock will go up, and if something else will happen and Microsoft stock will go down. This allows you to pull those that demand forward, like the investor demand to buy or sell, and then you make decisions based on what investors think, uh, as opposed to them just trading after an event happens, if that makes sense.
Oh, okay. Yeah, I kind of get how it works. So then you're not trading whether it is happening, you're kind of trading whether if it happens, it will be beneficial or not.
Exactly. Yeah. You're trading what would be the value of Meta if X were to happen? What would be the value of Meta if X were not to happen? Which, like, from a profit increasing perspective, like, if your goal is to increase discounted cash flows, that's kind of all you care about in any decision is what's the enterprise value if it happens and what's the enterprise value if it doesn't.
Okay, makes sense. So you were kind of talking about like one of the big problems with like traditional DAOs and kind of traditional governance structures is that like there's a big voter apathy problem. Like what are the kind of the attack vectors and like the weaknesses of like a futarchy compared to these structures?
I think the main downside of a futarchy is the Keynesian beauty contest problem, which is just a problem with all markets. Where, like, I mean, right now you can see this, especially in crypto, where people buy, I don't know, Bonk, not necessarily because they think Bonk is going to produce a lot of cash flows, but because they think other people are going to buy Bonk for a higher price after them. Um, and so that's the key insight there is that people don't always trade based on a DCF model. They sometimes trade to pre-buy, like to front run other people's irrationality. Whereas when people vote, it's not really the same. Like you don't really vote to front run someone else's bad vote. And I think that is the primary weakness. I mean, I wouldn't be here if I believed that uh, voting was better. Empirically, you can look at examples of where markets have been compared to other systems. Like, for example, presidential elections, we've got prediction markets and then we've got like pollsters and experts. And empirically, all the research says, or almost all the research says, that the prediction markets are better predicting who's going to be president or prime minister or whatever than the pollsters or the experts. Uh, after after the also like in companies they've run prediction markets to predict like when like HP used prediction markets to predict printer sales, and that was more accurate than their prior internal forecasts. Uh, when the in 1980 when the Challenger space shuttle blew up, uh, it it took the government I think 2 to 4 months to figure out that Morton Thiokol's O-rings were the cause of the blow up, but the market had priced it into Morton Thiokol's stock within 14 minutes. Like it had gone much lower than the other government contractors, and so I think markets are better. But yeah, the main problem is the Keynesian beauty contest. One.
Okay, makes sense. Do you think there's like certain types of organization where this is more beneficial or less beneficial in, or do you think this is like if kind of figured out correctly, a more kind of beneficial way to like run an organization?
I think it's an experiment, and we don't know if it's going to work. But if it does work, then it will probably be broadly beneficial for organizations to adopt. Like, if Futarchy works, probably every, for example, DeFi DAO on in Solana or in crypto should be a Futarchy. There are some organizations that can't be futarchies, like markets for OpenAI is actually an example of an organization that can't be a futarchy because markets can't price existential risk, right? Like no one cares about the price of financial contracts if the world blows up, uh, and so you can't really like price those uh, into a futarchy, and so yeah, those have to be governed by other systems. But I think if futarchy works broadly, it should be probably they should work for most organizations.
Okay, makes sense. So at Meta DAO, kind of what's the goal of Meta DAO as a DAO? Like you guys are kind of trying out a novel governance structure, but like what's kind of the plan to use this governance structure for?
Sure. So, I mean, the main goal is the Meta DAO is an we're trying to. I mean, we call it the Meta DAO, and that's kind of an homage to the DAO of 2015. We kind of want to try like the goal is to be like that, where you have this central DAO in the middle, whose goal is to increase cash flows, like an economic organization. And then you build products under this, and maybe you make venture investments, all kind of under this one umbrella company. So yeah, kind of like a venture studio, maybe, kind of like a venture fund, kind of like a corporation with many different products or many different brands, like a horizontally or vertically integrated company. Uh, I think that's something in that sphere. Obviously, this hasn't been done before, right? Because the DAO, after they didn't work out because of the hack, they didn't try it again. So I don't think someone before has successfully executed what we're trying to tilt at. And so there's like no clear exact uh, prior example we can point to of what this would look like, but something in that arena, if that makes sense.
Yeah, totally. So you've kind of been in crypto for a while now, and like, what do you kind of see the future of DAOs as? Like, yeah, what's your vision for the future of like decentralized organizations and like them becoming, I guess, more actually decentralized?
Well, I think that they have to become more decentralized, right? Like at least in the DeFi context, which is in the short term, kind of what I'm focused on. Um, because the reason why DeFi needs to be decentralized, and the reason why crypto in general needs to be decentralized to be a financial system, is because, well, A, you need credible neutrality, and B, you need state. You need to be independent of the state, because a large reason why the existing financial system sucks is because of regulatory capture and all these laws that don't really need to exist and only to exist to preclude new startups from entering the arena. And if you are not decentralized, then you have neither of those things. Right? You're not credibly neutral because you have the small group that makes private decisions, and they affect they are the main thing that drives the DAO. And you're not also state resistant, right? Like if someone, a government can come along and get your people and like tell them what to do, or else go to jail. And so I think if DeFi wants to survive, it needs to be decentralized. I hope that the Meta DAO can play a part in bringing us there. And I also, but if Futarchy doesn't work, then I hope that that other people who are experimenting with DAOs are able to figure stuff out. I think there are like other interesting experiments. Like one that I heard about recently was called Elastic DAO. I never heard of it, but essentially how it worked is that uh, it tried to get around the voter apathy problem by diluting all of the holders of Elastic tokens that didn't vote in decisions. So if you're like a whale but don't vote, then your tokens are worth less, not worth nothing. Um, and yeah, so I hope that one of these experiments works because we need it to.
Okay, yeah,
I don't know if that's like a vision. I don't think I have a vision for DeFi. I just have a hope that with some of these works out, right?
yeah, fair enough. So you were talking about kind of like the first proposal you guys have had so far. Like, how do you think that's going, and what have you like noticed with like this or this first market that's opened up?
Sure. So yeah, on the numbers, we have uh, like 65 people that eventually became members, I guess, or participants in the Meta DAO. And of them, I think 20 have traded in the conditional market so far. Uh, people, I think at the start we had a really crappy UX, right? I've never been a UI designer or even a front end engineer, and so my UI was god awful, like completely disgusting. Thankfully, this other guy who just is a contributor to the DAO, and I didn't know him before, but just like also kind of interested in seeing this forward. He built a UI, and so now the UI looks less bad, and it's getting better every day. And so people are starting to understand how to trade these in these markets, because it is like a new concept, right? Like conditional trades is like a new primitive. Um, but I think overall, people are pretty interested and pretty engaged. I think this is definitely like a really lucky time to launch because everyone is in a speculative mood, and the Meta DAO benefits from speculation. Like that's what drives their decision making. Uh, and so overall, it seems like things are going pretty well. Uh, and people are engaging with the process. And price discovery has also worked surprisingly well. Like right now, spreads are not crazy high, and we're 4 days in, and it seems to have settled around $1 in the fail market and $3 in the pass market. That'll probably change a bit, but still cool to see that there's some equilibrium that's being reached, even among like even on a small scale.
Yeah, that's pretty cool. You'd expect it to be very liquid, especially on the first the first uh, proposal.
Yeah.
So
Well, it was super. On the first day, the bid was like $1 and the ask was $800. So we definitely started pretty liquid, pretty out there. But yeah, it's cool to see it converging relatively quickly.
that's awesome. So I guess what has you kind of excited, like bigger than the Meta DAO? Like what has you excited about crypto kind of going forward, and like what kind of has you optimistic about the space?
Well, I think to me, it's DeFi mainly. That's at least where I spend most of my energy and thinking. Uh, ever really since I've gotten into the space, I've never really been into like NFTs or anything. Nothing against them. It's just not what I'm interested in. Just this idea of the financial system right now is essentially a 5.5% tax on the global economy. Right? It takes 5.5% of global GDP, uh, which is not optimal and not necessary, and something that's maintained through regulatory capture, in my view, to a large extent. And so the idea of building a system that's totally atomic and permissionless and open, sure, but also brings this maybe down to like 0.5%, is pretty cool to me. And I've always been kind of a nerd about uh, finance and like just the financial system and how it operates. So that's at least what I'm excited about.
Well, that's awesome. I think that's a good way to wrap up this episode. Thank you for coming on.
Cool. Yeah. Thanks for having me.